U.S. stocks are continuing a downward slope today after falling sharply last week. On Friday, the Dow Jones Industrial Average closed down nearly 1,000 points, recording its worst day since October 2020. The Nasdaq Composite fell by more than 330 points, while the S&P 500 dropped over 120 points. That was the biggest one-day drop for both indexes since March 7th. For more on all of this, I want to bring in Christine Benz. Christine is a director of personal finance for Morningstar. She's also an author of 30-Minute Money Solutions, a step-by-step guide to managing your finances, and the Morningstar Guide to Mutual Funds, 5-star strategies for success. Whew, that was a lot. Got that all out. Christine, we're so happy to have you. Thank you for being with us. So can you explain the overall reason behind the stock market's pretty steep fall last week, at least at the end of the week? And do you think that trend will continue through this week?
Well, there are a lot of different factors at play. I would say the biggest factor is the Federal Reserve and its plans to increase interest rates. Inflation is one of the main things that's causing the Fed to decide to take action here. But also market participants are concerned that the Fed could act too aggressively. And if it pushes too hard on interest rates, there are concerns that it could push us into a recession. So there's a little bit of a push-pull. And then a sort of a overlying factor is that we have had a great long-running rally in stocks. So stocks were pretty expensive coming into 2022, and so they were subject to this fall that we've seen recently because stocks were simply expensive.
And so what will both big and small investors be looking at this week? Because we know for a lot of people who try to time the market and are looking to invest actively, they can look at these moments as, buying opportunities if they're following a certain sector. So what do you think they're going to be looking at specifically this week?
Well, we do have some of the big tech companies reporting earnings this week, so I think investors will be looking closely at them. Some of these companies are the biggest component of the stock market today, so they're very much driving the market's gains. I expect investors will be plugging into what goes on there. But I do think that for investors, big and small, maintaining that long-term mindset is really helpful. So even though it's very difficult to tune out these kinds of volatile days that we've had recently, this sort of volatility is actually your friend. If you have a long time horizon, you want to be a buyer when stocks have fallen as they have recently. You don't want to be pulling back after stocks have fallen. But time horizon is absolutely key. If you're someone who is getting close to retirement, I do think it makes sense to make sure that you have safe assets in your portfolio that you could pull from if you needed money for your living expenses.
Right. Timing is everything, as you say.
It is.
And also, as you pointed out, Christine, these technology giants, including Microsoft, Meta, and Apple, are set to publish their quarterly reports on Tuesday. How do you expect this data to look, first of all, and how will this data drive the overall markets?
Well, I think we'll probably continue to see very strong growth from some of these companies. That's why they are among the most highly valued companies in the market today. But I think investors will be looking very closely and will be pretty picky about the earnings that they will release, because even though some of these companies have been knocked down pretty far so far this year, they still are trading at pretty lofty valuations relative to other market sectors. So I think investors will be expecting very good results from these companies.
All right, Christine Benz, thank you so much. We appreciate your insight.
Thank you so much, Tanya.